All right. So if you're a passive investor, it's always important that you continually refine what your strategy is, particularly as things are changing, right? The Fed is raising rates. Real estate has changed. Payments, if you are buying single family houses, have gone up substantially. So I think when you look at strategy, it's really important to talk to really smart people that are really, trying to get ahead of the curve and saying, well, what really is going to look good in 6 to 12 months or 2 years or 5 years, or what's this going to look like? And so my friend Marco Santarelli, we've known each other for a few years. He's just an awesome guy. He's got a podcast called Passive Real Estate Investing. It's an awesome podcast. Hope you check it out. His book, The Ultimate Guide to Passive Real Estate Investing. He's adding a lot of value to the space. So Marco, welcome. How are you today?
Hey, Bronson, I'm doing great. It's good to be back on your show. Thank you very much.
Awesome, man. Well, I appreciate, like I said, all the stuff you're adding to this space, but your passion and my passion are very similar, are about passive investing. So would you just walk us through a little bit about your kind of your background and how you got to really love passive investing as much as you do?
Yeah, I mean, long story short, when I was a teenager, I just kind of fell in love with the whole idea of creating wealth. I just realized that there were people out there that didn't need to work, and I thought that was fascinating. Like both my parents were working, my mother working 2 jobs to make ends meet. So, I mean, I didn't come up from a wealthy family. So I kind of started studying money, if you will. And what intrigued me was businesses and real estate. So I spent a couple of years as a teenager just educating myself. And then I know this sounds like amazing to some people, but when I turned 18, I bought my first rental property. And
Wow, that's huge.
it
Yeah.
is a big deal in hindsight, but at the time I just thought this is what I need to do. So when I became an adult at the age of 18, I could qualify for financing. And that's what I had to wait for, is literally become an adult to buy my first rental. So the writing was on the wall. But I didn't really think about it in terms of active and passive income or active and passive investing at the time. I just thought, okay, business is where you should be because you can make a lot of money owning and running a business, which is true. And, it's something we can certainly talk about. But when you look at what a lot of wealthy people do, oftentimes they have a business, a side hustle, small business, maybe a large business with employees, but they take profit from that business and they funnel it into real estate, because real estate is a great preservation vehicle for wealth. So they make money and then they deploy those funds into hard assets like real estate, because it does two things. One, it preserves your wealth. It preserves the purchasing power of the dollar. And second, it also creates wealth long term. So you don't necessarily need to make a lot of money or own a business to become wealthy if you can invest in real estate, because that will take care of itself. It's just, if you own a business and you invest in real estate, it's kind of a fast track to wealth creation. So I learned that early on, but I never really thought about it in terms of passive income. But I knew that time freedom, which is ultimately what I wanted, came from financial freedom. And financial freedom required passive income to achieve. So it's really, if you work it backwards, what we ultimately want is not financial freedom, it's time freedom, but it requires that financial freedom and the passive income to achieve it.
Yeah, that's a really good point. I think a lot of people, like you said, they want financial freedom, but they really want is time. And that's something I've watched when I was still making good money in a job. When I was able to leave my job a year and a half ago, it would just open up so many doors. Like I've tried 6 international trips this year, most of them just for fun, and just being able to do things, spend time with people that I want, work where I want, be able to go look at deals and this kind of stuff. Take us back for a minute. So you're 18 years old and you qualified. Did you have to get a cosigner? Like, did one of your parents cosign, or did you? Because I know a lot of times, even to get a credit card, there has to be kind of some sort of credit history. So you were 18, you had saved money. Was this like a house I know you're in Southern California. Was this in the area? Was this like a really cheap house in Cleveland? Like, can you give us a little more story of like how you did that with that first house?
It was out of state. It was where I grew up in my hometown, but I did not need to get a cosigner. The reason is because I worked for a grocery store at the time. I was stocking shelves. And because they had their own credit union, it kind of helped out a little bit. But to a large degree, I still would have been able to qualify with enough of a down payment and good credit. And again, government subsidized financing, just like, our conventional financing, Fannie Mae, Freddie Mac. I mean, at the end of the day, these are government sponsored entities. They're subsidized to a large degree by the secondary market and the federal government. So it makes the qualification criteria that much easier. Now, if I was going out to get maybe a car loan or like a signature loan, it might have required a cosigner just because it needed someone else's backing. But because it's real estate and there's collateral and you're putting a down payment and the bank can foreclose and go back and take the asset, it's easier to qualify because they're not only qualifying you, but they're qualifying or underwriting the asset. And it wasn't in a bad neighborhood. It was actually in a kind of a middle low income neighborhood that was stable. I mean, there was nothing sexy or exciting about it. It was just an average neighborhood.
Right. Okay. That's cool. I always love to hear stories how people get started when people start really young like that. That's awesome. So over the years, did you continue straight in real estate, or did you have another career that you did for a while until you had enough passive income to be able to retire? Or what was kind of the next step after that, or how did you kind of get that
I
going?
was a serial entrepreneur with many, many failures.
Okay.
But that's what a lot of entrepreneurs do. They just
Yeah.
throwing mud on the wall, and eventually something will stick. But the beautiful thing about being an entrepreneur and failing is you can learn from your mistakes, because the lessons are actually in the mistakes, not the successes. It can be easy to duplicate your successes, but when you have failures, there's a lesson there every single time. And if you learn from those lessons, you know what to do differently or better the next time around. But look, most entrepreneurs don't succeed the first time around or even the second. They keep trying, and it's the school of hard knocks. And for many people, it's really street smart education, not book smart education. And that's really where I came from. I just kept trying and trying with different types of businesses in different industries, not knowing where my core expertise lay, but ultimately figured it out. Somewhat by accident, but it was real estate. I combined entrepreneurship with real estate, and I just found that was where the two spheres intersected for me.
Yeah. Yeah. It's amazing when you find out kind of what you're here to do and what works. I mean, I remember I share this publicly, but I have my options trading strategy that I tried for a while, and I ended up losing. My net worth was only like 200K, but I lost like 70K in one day. And I remember just feeling like, oh my gosh, I'm such a failure. I'm so terrible. But I learned something. I learned that I am not a good options trader, and there are other things that are better for me. But then when I discovered real estate and working with investors and people, I learned that, okay, I can do this. Is a much more safe, predictable investment. But Robert Kiyosaki has this book, and it's called Before You Quit Your Job. And I recommend it to anybody before they leave their job. But he describes like being an employee is like you can't make any mistakes, because if you make mistakes, like you get fired. You make too many mistakes, you get fired. Well, as an entrepreneur, you got to make a lot of mistakes. And then what you said, it's your ability to quickly learn, right? To learn, make adjustments. Describes it as jumping out of an airplane without a parachute and trying to assemble one before you hit the ground. So it's kind of like, it seems like over time, you kind of figured out how you're going to do it, and you create a soft landing for yourself, which is good. So talk to me. I know your passion is passive investing, which I love. I can tell over the conversations we've had over the years that you're a strategist. You're looking at all different things of, it doesn't matter necessarily what the investment is. It matters what it does for you. I think you and I both love real estate because there's some unfair advantages, some tax advantages. There's just, inflation hedges, other things like this, which you brought up. What are some, like, I think there's some new strategies that investors have to look at now. How do you think just kind of the traditional passive investing model has changed, or is it changing, or do you see it's just the same thing and it just looks a little different, or are you seeing any changes that passive investors really need to pay attention to right now?
There's probably a lot of questions rolled into that one.
I asked you 10 questions in one. That's my gift of so
Yeah.
take it whatever way you want to take it.
The idea of passive income hasn't changed. The concept of passive investments probably hasn't changed. Strategies can change, but where do you find that passive income? That could be, I kind of look at it as a three-legged stool, actually four-legged if you really want to include promissory notes, which is what one of our companies offers. So I look at it this way: businesses, like if we were talking about this, businesses can become passive income vehicles, because if you build a viable business and you replace yourself out of that business where you have employees that essentially run it, then you don't have a job anymore. You have a business, which is an asset, and that can generate passive income. You get, call it distributions, whatever you want to call it. Real estate can create the same thing. You build a portfolio of real estate over time, the rents increase, your cash flows increase. That's passive income. Now, it's not completely passive. You have property management, unless you're managing it yourself, but you have property management. So you're like managing the managers. Those are the two most important asset classes, because those can be great hedges against inflation and provide solid income and wealth creation. The third and fourth leg of that stool for me is, some people are going to listen to this and say, "What? Yeah," is our crypto assets, not cryptocurrency, crypto assets, certain ones. Now, they don't necessarily generate passive income. They can, if and that's maybe a topic for another day. But there are certain crypto assets you can stake and generate a yield from, and that generates passive income. And again, it's also again long term a hedge against inflation. Historically, that's what it's proven to be. Fourth is what I'll refer to as high yield promissory notes, which is what one of my companies offers through Norada Capital. You can earn up to 15% per year or more from those promissory notes that are essentially 2 to 3 year, as many as 7-year notes. At the choice of the investor, they choose the term, but that's just monthly predictable income. So that's also passive income. In fact, notes in general, regardless of whether they're notes on cars, boats, homes, which are mortgage loans or mortgage notes, those are very good forms of passive income. A lot of people don't really think about it that way. They think of investing in real estate as an example through the asset of buying an apartment building, through a syndication. By the way, syndications are actually good forms of passive income too. But again, you're investing in the asset class of real estate. That is passive income, but you're investing either through a syndication or through a note of some kind. Anyway, I can go on and on about this, but those are really the 4 categories that I look at when it comes to passive income. Sure. And you just have to decide, what resonates with you. Where do you want to put, your investable capital, and how do you want to split your portfolio up between those?
Yeah, you mentioned one that I thought was really interesting. I mean, of course, they're all very interesting because they generate passive cash flow, which is awesome. But you talked about crypto assets. We have obviously blockchain is kind of the underlying technology. I emceed the blockchain and real estate summit in Austin, Texas this year, which was great. But I'm familiar with cryptocurrency and I'm familiar with blockchain technology. But what are crypto assets? Can you define how that's different than cryptocurrency?
Well, a crypto asset is something that is not a medium of exchange. Well, a lot of people refer to crypto as cryptocurrency because they think, oh, we're going to buy some Bitcoin, I'll use it to buy a pizza right. Or whatever it is, right? Now, technically you could use Bitcoin to purchase any kind of goods or service as long as the selling party accepts Bitcoin. I mean, if you've got Bitcoin, you could certainly trade it in like a fraction of a second and make a payment. But what I call crypto assets are things that are as defined by most other people, an asset, something you buy, hold, has value and can increase or decrease in value, just like stock. So Bitcoin would be an example. Ethereum would be an example. Solana, all these what they call layer 1 crypto assets or blockchain technologies. They have a price. You can buy and sell them, just like stocks. You could buy and sell them at a particular price. Prices changes by the hour, by the minute. So if you hold that asset, you can sell that asset. And so that's what a crypto asset is. If I buy Bitcoin today at $20,000 and, let's say 6 months from now, it's worth $22,000. Well, I could sell it for $22,000 and make a $2,000 gain. So that is what I mean by a crypto asset. It's something that has value and can be traded.
Yeah. Okay. Awesome. And I appreciate you sharing that. Yeah. I think there's more of cryptocurrency holding it as an investment. And of course, there's staking opportunities and other things people can do. And of course, in the blockchain, there's all kinds of, virtual real estate and NFTs and all this stuff that's going, which it gets really creative. But well, let's come back to real estate a little bit, because for a lot of people, that's a very understandable asset class. And either they own a house, a couple of houses, what do you think is if somebody's, maybe they have a rental house, or they've got a couple of them and they're like, I'd love to do more, but getting into something that is a little more passive, because even if you're running things yourself, or maybe you're the manager, you're fixing things up, like what are ways people can get more comfortable? Because some people, they don't feel comfortable unless they're actually having some control over some of the day-to-day decisions. And if you're passive, it's works like one of our syndications. It's like you make the choice to invest and then you're pretty passive, right? You just get the cash flow, the mailbox money, which is obviously the name of the show. So what do you see kind of it kind of helps people get kind of in their minds to the point of like, oh, actually, I can see myself actually passively investing in a deal that I don't really necessarily have control over, or maybe I have less control over it?
Well, obviously that's a mental issue.
It's mindset, right?
It is all about mindset. Look, if you are OCD or you are a person that needs to have that control, then you're probably the one who's going to be driving the deal, underwriting it, and making the decisions and being involved.
Yeah.
This is true for syndicators. Syndicators, by definition, are the active investors in a deal, and they're bringing in partners as limited partners to raise capital and do bigger deals. So you just need to ask yourself, at whatever point in time in your life you are, do I want to be finding the deals, running the deals, funding the deals, and doing all the work? Or do I want to continue doing what I do with my job or career, spending my time with my family and just making as much money as I can, but deploying that investment capital into other people's deals or investments, whether it's your syndication or our promissory notes or a REIT or whatever. So you just need to, you need to ask yourself the question, do I want to be an active investor or a passive investor? And if you don't know, then you kind of have to maybe start defining what your investment goals are, be more clear with yourself as what types of assets you want to be in and what kind of returns you expect. Maybe you can't find them on your own, or maybe you can, and you can't find them as a passive investment. So, there's no black and white answer to your question. It really is the individual. Do you want to be active or do you want to be passive? Do you have the time to be an active investor? Do you have the core expertise, the knowledge to do a syndication or invest in a particular asset? If you don't, then you need to rely on partners or partnerships like syndications or REITs or a fund like Norada Capital or whatever it is. So it's really individual by individual.
Yeah, it's interesting. I reason I asked the question, I've had 1,300 one-on-one phone calls with investors, and a lot of times it's like most of the people haven't invested passively in anything, and it's just like it is a mind shift and it is mindset. I think for a lot of people, it's just getting to the point of, okay, I've looked at 10 deals or I've looked at this number. I just need to either get stuck in analysis paralysis, or they're just like it just feels foreign unless you've done it. And then for most people, I tell people about 98% of the time, people, they enjoy it and they enjoy being passive. Some people, they do have to be in the place of control, but control obviously is a limiting factor of how you can grow. If you can't 10x the amount of deals you're invested in, or the amount of money you're limited on what you can do by yourself. But if you get into more passive things, it comes back to that idea of really freedom of time, of what you mentioned, which I think is really interesting.
Yeah, and think about this too. We're almost talking about it in black and white terms. It's either or, but don't think of things in terms of either or. Think in terms of things as and. Why not be an active investor in A, B, and C, and be a passive investor in D, E, and F? You can have a real estate portfolio and be active in it. You can own stock and be passive in it. You can own promissory notes and be passive, and you can invest in your syndication and be a passive investor in that. You could actually be doing both, and it's probably a smart idea to be involved in more than one, so you have a little bit of that investment diversification. As they say, don't put all your eggs in one basket, although there's an argument to say, yeah, if you're really good at something, put all your eggs in one basket and grow that basket. Yeah. But think in terms of and, not or.
That's a great point. A lot of people that we actually, probably a lot of people listen to the show, a lot of them are active and they're passive, and I'm active and passive, and I'm sure you as well, Marco. You're active and you're passive, and I think honestly we should all aspire to be full-time passive investors where we're not doing as much. But if I also like some of the active things we do as well, and so I think it doesn't have to be necessarily one or the other. Let's shift gears for a minute here. Let's talk a little bit about, we got a few more minutes. Talk to us about what you see happening in real estate now. Obviously, at the time of this recording, we're mid-November. What are you? I mean, rates are rising for a single-family house. The payment has gone up substantially. What do you see? Do you still think real estate in general? Obviously, this is a very broad question, but do you feel like real estate in general, there's some great deals there, or do you think what are some areas of interest, or are you waiting, or what are you kind of going aggressively out there, or are you kind of doing a wait and see type of approach right now?
Well, yes, mortgage rates, like for a 30-year fixed rate conforming loan, has gone from roughly 4.5%, 5% to roughly 7.5%. So yes, mortgage rates have risen. Prices have been declining in many markets, not every market. A majority of the 150 markets we track, but really it's closer to 500, have seen a cooling off. So appreciation rates have slowed down, or there have been corrections where prices have been falling. Again, this is very, very market specific. even sub-market and even zip code specific, because you could literally pull up a map of a large metro area and see prices appreciating in one zip code, and there's a zip code nearby within a few miles that are depreciating. So you see two contrasting things going on. So yes, there has been quite a bit of a change this year for many reasons, and most of it's been because of interest rates rising and mortgage rates rising. But having said all that, I've always said that when it comes to investing in real estate, it's not a question of when, more so a question of where, because even in recessionary times or market cycles that have been pulling back, there are always opportunities out there to pick up deals in real estate in markets that either cash flow well, or markets that are still appreciating or holding steady, or a combination of two. So not only do we go through economic and real estate cycles at a macro level, which is really just a big picture backdrop, but when you zoom in to a local real estate market, you'll see that every market runs independently of each other, and there are things going on in each market that suggest this is a good time to be investing, this is a good time to be holding, or this is a good time to be selling. So you buy, hold, or sell. That doesn't mean you're a trader. Everything's got a long-term horizon, long-term perspective. But the point I'm making there is that there are always opportunities to be investing in real estate if the deal is right, and the deal really comes down to the market, the sub-market, the terms on that deal. Does it cash flow? Does it have appreciation potential going forward? That's a function of the market's fundamentals and technicals. And that's just all a fancy way of saying that there's always opportunity out there. It's just a matter of where you're looking, not so much when you're looking. There are times when there are more deals. There are times when there are fewer deals. Right now, we're seeing less deal flow and fewer markets that are offering good opportunity. But look, we're still moving about 800 properties a year to our investor clients that are completely turnkey, tenant occupied, fully financed, et cetera, et cetera. Investors have not stopped investing in real estate. It's slowed down, but they're still buying a lot of property because the deals are out there.
Mm-hmm. Yeah, absolutely. No, I love that you guys are doing deals, and there's always opportunities in any market if you're paying attention and you're just willing to do the work and look for it. So that's great. And what are you, I guess when it comes to paying attention, obviously, you and I think we're both macroeconomic students as well, and we're paying attention to what the Fed is doing. We're paying attention to some of these different factors. What are just a couple things you think investors should pay attention to when it comes to just the stuff that's going on kind of above real estate, like kind of the global finance and what Powell's doing with rates, and just can you talk a little bit about that?
Well, depends on what your end goal is and what you're really trying to find out, combing through the fog of, all the economic information out there.
Yeah.
It doesn't hurt to be in the know at a high level if you're an investor, regardless of what you're investing in. So it doesn't hurt to have a general sense of what, the economic backdrop is. Are we in a recession, and how that might affect you? Now, arguably, we are in a recession. We have been for months. The mainstream media hasn't really been, talking about it a lot, or breaking news, flashing red light. We're in a recession, that kind of stuff. Thing is, by the time they start talking about that on a daily basis, we're already coming out of the recession.
Right.
Like things have turned. It's not on everybody's radar because, these are all lagging indicators. It might be 3 months before, we get the next GDP report to say, okay, well, we've now come out of this recession. So, but, it's good to just keep a 40,000 foot view of what's going on economically. Just keep an eye on what the Fed is doing and the rates. The thing is, if the Fed is pumping the brake and they're raising rates to try and control inflation, then that mortgage rates, even though they're not directly correlated, mortgage rates are going to stay high or continue to go up. If the Fed takes their foot off the brakes, then we're going to start to see more confidence come into the market, and the stock market will start to rally again. Bond yields will start to change, and mortgage rates will start to normalize or maybe come down. When the Fed starts pushing the gas pedal and they start quantitative easing again, meaning they're starting to create credit and loose monetary policy, that's when interest rates will start to drop again. Mortgage rates indirectly related to that will start to drop again. And and it'll start to juice the stock market, to start to juice the housing market again, because affordability will increase, more people will qualify for financing, it brings more people into the market, which increases demand. It'll start to sustain prices or maybe push prices up again in high demand areas. Builders will start to build more again and put more product out on the market. So that's really all you need to really pay attention to. If you're glued to, CNN or Fox News or whatever on a daily basis, you're just going to hear a lot of noise about what politicians are arguing about on a daily basis, and that drives me nuts. I literally stopped watching, mainstream media news over 4 years ago, and it was the best thing I ever did.
Yeah, me too. I don't really watch the news because it's such a distraction. These talking heads, they have opinions on everything, and none of it's relevant, or it doesn't really matter. I'm of the opinion that I think that the Fed will reverse course in the near future, the next 3 to 6 or 12 months, potentially, just because of a recession or something breaking in the financial system. Do you have any opinions or predictions on what will happen next?
Yeah, my opinion is that they will take their foot off the brake and start tapping the gas pedal within 12 months. I don't think they can sustain what they're doing for longer than 6 to 12 months without crushing the U.S. economy. And the last thing they want is to slide into a long-term recessionary period, or risk creating a global recession, because there's a trickle-down effect. If we go into a long-term recession and our economy is hurt for a long period of time, that just has a domino effect into other people's economies, because we're such a large consumer society, the US, well, North America, but the US, that if our imports are dropping from other countries, it's going to impact those countries. They're going to have their own, accelerated recessions. They're really walking a fine line, trying to keep inflation in check while at the same time not crush, the U.S. economy, and at the same time, I don't know how much they really care, but impact other countries, because they've jacked up rates so fast that it far surpassed the rate increases of all other countries, and now the U.S. dollar is so strong compared to other countries that it's hurting them, because their currencies are so weak, that they're having a hard time doing commerce with the U.S. So it's we truly live in a global economy.
Yeah, absolutely. No, I love that you shared that. And I just did a video recently about the strong dollar and how you can take advantage of it, and just how if you're right, if it's a fine line. It almost feels like an impossible task, right? How do you control inflation without really hurting the economy in a way? Because it's you're in a way you kind of have to really get things under control. But
Yeah.
but that's I appreciate you sharing that. Well, before we wrap up, Marco, I appreciate you being here with our group. Talk a little bit about what you do. You mentioned turnkey. What are some of the other investments that or how do you help passive investors? What are some of the things that you're working on?
Well, if the theme of your show is passive investments and whatnot, I mean, again, we've talked about syndications, like what you do a lot, and that's a great option for many people. And I think a lot of people invest in syndications. It's a great way to get into real estate. Norada Real Estate Investments is a turnkey real estate investment company, and for actually closing on 19 years now, we've been offering fully turnkey investment real estate to investors who want to be held by the hand and go through the whole process and have everything done for you, essentially done with you. One of our other companies, which is Norada Capital, is truly passive. They're promissory notes that pay a minimum of 12% per year. It goes up to 15% or more fixed rates of return, and those are paid monthly. And investors can invest as little as $50,000, and they choose the term that ranges from 2 to 7 years. So those are just monthly distributions at the beginning of every month. It's just an auto deposit, and those are backed by our portfolio of 16 companies that are growing literally month after month. So that's probably about as passive as it gets in terms of investment capital. And it's great for self-directed retirement accounts, which is what a lot of people have been trying to make changes to, because they're scared of the stock market, and they're trying to actually divest to some degree out of the stock market because of all the uncertainty, and put it into something that's a little bit more stable with fixed income, like fixed rates of return. So it's an option for those people.
Yeah, that's great. There's definitely choices. And like you said, it may not be one or the other. It could be active and passive, or being a little more active or more passive and things. So that's awesome. Well, I encourage everyone to check out Marco's podcast, Passive Real Estate Investing. It's a top podcast. Really appreciate you being here today, Marco. I appreciate all the value you're adding to the investor community and encourage everybody to reach out and connect with you. What's a good way people can follow you or get in touch with you?
Well, I appreciate you asking, and thank you, Bronson, for having me on the show. I always love having conversations with you. I don't know when this episode's coming out. I'm literally in the middle of rebuilding my personal website, which is not up, but it's at marcosantarelli.com. Essentially my full name, marcosantarelli.com. In the meantime, noradacapital.com, Norada, is one way to get a hold of me. And noradarealestate.com is the other way to reach my team and I. So,
all right, man of many websites there. I love it.
Sorry.
To connect. I love it. That's great. Awesome. Well, thanks, Marco. Appreciate you being here.
Thank you, Bronson. This has been great. I appreciate it.
All right. So Marco, as you can see, has a lot of things that he's doing, stuff in the turnkey space, notes, crypto, all kinds of stuff. And I think the nice thing is that as a passive investor, you don't have to do everything, right? You can be active, you can be passive, but whatever you do, if you continue to learn, you continue to grow, it can open up new opportunities and new opportunities for growth. So that's what I loved about it. I love, getting involved. He's also around, we kind of talked off air about this. He's really around some amazing people where he's finding great opportunities, great deal flow, finding, just being in the room with people that are doing next level stuff. And that really has helped him to grow as well as an investor. So anyway, his podcast is a top podcast. I do recommend that you check it out. It's called Passive Real Estate Investing. And he mentioned 19 years of doing this, which is really awesome. So I wanted to just give a shout out for those that have reviewed this show on iTunes. I'm on a campaign right now that it really allows us to get better guests and be able to have guests that, we can continually present to you that are doing big things. And, people like Ken McElroy or Buck Joffrey or some of these, big time guests. So I wanted to read a review for you. This comes from Alex Linda. Says Bronson brings insight to some complicated topics and has wonderful guests and is so generous in sharing his knowledge. I hope you enjoy listening as much as I do. So if you would write a review on iTunes, we will potentially read your review and give you a shout out on this show. But the best investment that you can make is in your own education, and congrats, you did it. You're the average of the 5 people you spend the most time with, and you're spending time with Bronson Hill and Marco Santarelli. We'll look forward to seeing you on the next episode of Mailbox Money.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.